Hi everyone, I'm Tina, founder and chief number cruncher of Accounting Pros, and I'd like to give you a few updates regarding the Paycheck Protection Program. So as of last Friday, the Department of Treasury has released an update regarding how you would calculate the payroll costs related to your maximum loan amount. And in previous videos, I had mentioned that you would be able to include independent contractors in your calculation. However, last Friday, they have provided an update which tells us that no, you are not allowed to include that cost. And I'm going to walk through where I'm finding this, and I will put all of the links in the information below. So, payroll costs that you can include are compensation to employees whose principal residence is the United States. That's still the same. So salaries, wages, commissions, or similar compensation. There's a little confusion around how we would include things like owner's draws. If we have a client who has an S corporation, we'll include both the W-2 wages and the distributions up to $100,000. And we'll also include, if you're an LLC member, or sole prop, etc., we will include your draws up to $100,000 as well. Again, it's up to the lender to interpret this. I haven't seen anything that specifically says distributions as being disallowed. I've talked to my lender and they've said that they will allow it as long as we do not go over that limit. But if you get any sort of pushback, please refer them to the final interim, ruling by the Treasury and let them know that, you are an officer of the corporation or you're a member and your wage is a draw and that is considered similar compensation. And in this interim ruling, they've also expressed what is not allowed. So again, any compensation for anybody who's not in the U.S., anybody who gets, or any amounts over $100,000. So you can include everything under $100,000 and under. And federal taxes, and this is all going to be on the employer side. And I have seen a lot of calculators, etc., from different payroll companies, or even just people putting their numbers together. And I'm going to tell you what I'm seeing out there is mostly wrong. And we have had many, many conversations about this. And thankfully, the Department of Treasury has updated their guidance to how this needs to be calculated. So I'm going to skip over to that. So skipping down to question number 16 on the FAQs from the Department of Treasury. How should a borrower account for federal taxes when determining its payroll costs for the purposes of the maximum loan amount, allowable uses of the PPP loan, and the amount of loan that may be forgiven? So, under the Act, payroll costs are calculated on the gross basis. You're paying your employees on a gross basis, not net. They are getting paid net. You are paying gross. And so you need to include that. As a result, payroll costs are not reduced by taxes imposed on the employee and required to be withheld by the employer. But payroll taxes do not include the employer's share of payroll tax. So we need to make sure that we're including gross. We're not including the employer portion of the federal tax. That's like FICA, Medicare, Social Security. And we're adding back the employer portion of the state and local taxes. And I'm going to show you how I calculate that, and we'll give you our updated calculator in the information below. Sorry, I'm dead tired. We've been doing PPPs for a week straight. Anyway, so just make sure that you know that you are not going to be including net pay. You're only going to be using gross pay. You're not going to be including the employer portion of federal taxes, but you do need to add back the employer portion of state and local. And because state and local taxes imposed on the employee again would reduce their total compensation in terms of net, you're not going to include anything related to the employee, only the gross. Because when you pay the employee, let's say that you pay them $1,000, they're going to get $900. You are paying them the $1,000, they're getting the $900. They're getting net, you're paying gross. Another question that I'm getting is, what time period should I use in determining the numbers? And if you were in business 2019 and 2020, we're using a rolling calendar year. So we are starting at April 1st, 2019, and we're ending on March 31st, 2020. And the reason that we do that is because it is more beneficial to you as the borrower, because our employers that we work with tend to pay people more over time because they're getting more successful, they're hiring on more people, etc. And if you're trying to get a loan based on bad information, maybe your payroll costs are higher, they probably are, but you're getting less money, then you have less money to pay your employees right now. And so in this frequently asked question, they talk about this. So they say that you can use data from the previous 12 months or a calendar year. So in my calculations, I have the ability to enter both bits of information. And if I were you, I would use the most beneficial number for your business because you need to be able to have the most funding available so that you can continue to pay your employees. And for us, that's really the rolling calendar year. And the last question I'm getting a lot is around independent contractors. And this question is answered in two places. So in the frequently asked questions, do you need to include independent contractors in your calculations? Originally, it was a yes, and now it is a no. And they specifically say any amounts the eligible borrower has paid to an independent contractor or sole proprietor should be excluded. I do not agree with this at all, because it is my understanding that you as an employer, even if they are not your employee, you're still paying them. They're still an expense to your business. And I personally think it should be included. But unfortunately, I'm not the head of the Department of Treasury, nor do I make the rules. So we're just here to make sure that we're doing everything within the boundaries of the bill. And again, in the interim ruling that was released last Friday, they again go over independent contractors. So do independent contractors count as employees for the purposes of the PPP loan calculations? It is no. And I'm super sad about this, because we have people who have lots of contractors, and this really hurts them when it comes to the maximum loan amount. But unfortunately, that's how it's written and we have to follow it. And so former advice that I've given to include it is at this point moot. It is wrong. So this is the most up-to-date information as of today. What is today? April 7th, 2020. And finally, getting into the calculation. So I will put this calculation in the description so you can see how it actually works, but I'd like to show you it now and even give you a little bit of a glance into the formulas. So in this Google spreadsheet, we have two tabs, one for rolling year and one for calendar year. And again, the rolling year is April 1st, 2019 to March 31st, 2020. So you'll add in first name, last name, and then the dollar amount. And we have this here, you said it already shows that it's $100,000. There's nobody here. I'm going to show you what happens when I enter information into this cell, C6. So a person here is paid, let's just go Jane Doe, and they are paid $80,000 a year. You'll see that the number was reduced. So I've told the spreadsheet that if anything is over $100,000 to just max it at 100 or use the lesser of the two. So I'm going to show you how I'm going to add John Doe. John Doe is paid $150,000 a year. And you'll see that the number here didn't change. That's because we told the spreadsheet that we need to only include the $100,000. So when I provide the spreadsheet to you, it's going to be in a format that you can copy and edit yourself. If you need the formula, it's equals min, parentheses, 100,000, comma, and then the cell number for the one before it. And then you're going to close it out with a parentheses. If you need to add stuff in here, just right click it and insert a row. If you need to delete it, delete the row. But just make sure that these are not being included if there is no information about your employees. And then for employer contributions for health insurance, you'll just plug that information here. I only have one line here, but you should include things like health, dental, vision. And this again needs to be something that you can prove, and it's the employer side only. And then retirement benefits as well. This is going to be the employer portion. And you will only include, things like simple IRA, 401k, SEP, etc. So employee portion of the retirement. And then here I've got total employer payroll tax. So I have like 25 different lines on my own report with my payroll software because I pay people in lots of different states. I don't want to have this 100 lines deep because it would take me forever and it would drive me crazy. So I'll take the total employer portion of payroll tax. So let's say that we spent $10,000 at the end of the year, or calendar year rolling, $10,000 in total employer tax. Now I need to back out the Social Security, Medicare, and FUTA. So I'm going to take, let's just make some numbers up. $5,000 for Social Security, $1,000 for Medicare, and then $500 for FUTA. And you'll see that that number, did 5,000. We'll see that that number adjusts. That's because this cell is taking the total employer minus the Social Security, minus the Medicare, minus the FUTA. And I'm going to go ahead and delete some lines. And you'll see here that it auto adjusts. So this is taking the total payroll cost. Let's go ahead here. And it is adding the maximum payroll that we can use, the total benefits, for both retirement and health insurance, and the total state and local taxes. And then it's going to divide it by 12. So you can see here, it's taking that cell, dividing it by 12. And then it's taking that cell here, average payroll cost, and multiplying it by 2.5, which will be your maximum loan amount. The same thing happens on the loan calc for the calendar year. If you want to enter things that are for 2019 only, you'll do the same method here. You'll enter in your employee information. It'll auto-calculate the max, and it will auto-calculate the max loan amount. So if your payroll company has given you numbers that are net or include taxes that shouldn't be there, you're going to probably have to explain that to your loan officer or whoever later. So you might as well go ahead and do it right, include it in your documentation so they know how you came up with that number. So all this information will be in the comments. Ask me questions related to this. I'll do my very best to get back to you. But this is the exact way to do it. It comes right from the Treasury. So there's no ifs, ands, or buts about it. I'm not making any of this stuff up. So please use this to get the most amount of money that you can, because as an employer, you need it. It is your obligation to keep paying your employees because they are dedicated to your business. And the whole purpose of this program is to get people who you've let go back to work. So bring them back on, use the money wisely. The Fed is asking now that 75% of your total forgiveness needs to be from your payroll. So don't try to load it with utilities and rent and things like that. You need to pay your people. That is important, of the utmost importance. So thanks again, Tina with Accounting Pros. Hope to see you again soon.